Moving forward, our next CXO panel dives into the dual challenge of regulation and tech, moderator by Mr. Thiru, our financial inclusion expert, and our speakers, Mr. Lakshmanan, Group CIO, Samanati Financial Intermediation and Services, Mr. Vinod Kumar, CDO, Shriram Finance, Mr. Gokul Rajan, CDO, Induja Leyland Finance, check. Mr. Rahul Tripati, CPO, Dwara KGFS, and Ms. Swaparno Bakshi, COO, Balance Zero India. Let's give a big round of applause for all the speakers and the moderator.
Good afternoon, everyone. It's a very nice day in Chennai. So, thank you so much for the organizers for organizing this event. And it's a 20th edition of NBFC and FinTech Conclave. It's been conducted by these organizers, B2B and the founder, regularly for every year. And it's been a very good forum where a lot of exchange of ideas, and more than the panel discussions, the networking which happens. So that's really great to see the people in this ecosystem. So I welcome you all, and thanks for the organizers. So having said that, so we are for the next hour or so, we will be focusing on the discussion about how do we navigate, for particularly for NBFCs, how do we navigate the regulatory and the technical challenges. So that's a very interesting topic, and it's a timely topic. So where we need to, when there are a lot of NBFCs trying to grow and kind of achieve their business plan and stuff. So how do we manage that in this kind of challenging regulatory and also the technology framework? So I'm actually surrounded by almost, I think, more than 150 years of experience, at least, very wealth of knowledge. I would like them to introduce themselves, one liner or two about their name, their organization, and what they do in the organization, and then we can take it forward. Maybe Suparna, you can.
Sure. Uh, Firstly, thank you for having me here. Vanakkam, Chennai. It's always good to be back to Chennai. I lived in the city 24 years back, but it's always like leads to a very deep conversation. So yeah, looking forward to you. So I'm Suparno. I'm the Chief Operating Officer of Balance Zero. We are a fintech firm, like 100% digital on app. We have two lines of business, one on lending, so which is where we have our NBFC, as well as we do like co-lending and FLDG kind of partnership with other NBFCs and banks. The other side of the business is payments. We are a PPI license holder, so we have our own wallets, and then we enable payments on the digital world. Yeah.
So this is his formal introduction, but one of the fun fact which I know about him is he's a very passionate photographer who is having a degree in arts, and he has lived in 9 cities across 4 countries, by the way. So we have very international experience also, we could hear from him. So his one record, personal record, is he has taken 150 flights in a year. Not during the COVID, I mean. So that's a kind of travel and experience the Suparna has. So please welcome him by some good clapping.
Thank you.
Thank you.
So my name is Rahul Tripathi. I'm the Chief Product Officer of Dwara KGFS, which is a medium tier NBFC working in the rural part of the country. But that all is, you can find it online. What I take care of is products which are joint liability group loans and enterprise loans, which is nano and micro businesses. I take care of the consumer experience and how to make processes better so that we deliver services to our clients in a much more dignified and a much more timely manner. So, yeah.
Yeah, so Rahul is my old friend. We have worked in a different project in different organization. So apart from the formal introduction, his short name is LLM. So don't think it's some language model and all. His phrase is for late Latif Machan. And for late Latif Machan, he has 2 watches in his hand. That's not a good joke, it seems.
Yeah, it didn't work.
It didn't work. Over to Mr. Lakshman.
Hi, this is Lakshman. Okay, I'm completely new to NBFC world. I have not been here. I have not. I've been a core techie till 3 years back. So one of the things is Samunati. We do agri lending, and we are in agri business where we are trying to, at least the tagline that we work for is each of us. So to improve the equilibrium of the entire agri ecosystem is what we have as our vision, and I'm part of the organization taking care of technology side of things.
Yeah, welcome, Lakshman sir. He was a veteran in Ramco Cements and all that. But I was surprised when I heard about his fun fact. Is like really very amazing fun fact. It's like he's a hiker. So he has hiked 36 forts of Shivaji in Maharashtra. So looks like a great achievement, Lakshman sir. So maybe more than your technology thing, people might want to know about that later. Over to you, Mr. Vinod.
My name is Vinod. Uh, I'm the CDO of Shriram Finance Limited. We are a 50-year-old organization. We are one of the largest retail NBFC of the country. I head all digital transformation of the company. So the digital transformation has kickstarted very recently. We probably would have heard the company's name, but never on the digital front. But we are trying to take that forward.
Yeah, welcome, Mr. Vinod. Mr. Vinod is a hardcore techie, but more than a techie, he is actually a traveler at heart and is a big addict. Don't think anything else, he's a big coffee addict. So, but he couldn't get a coffee, so we need to check on that. Over to you, Mr. Gokul.
Yeah. Hi, my name is Gokul Rajan. I'm the Chief Digital Officer at Hinduja Leyland Finance, and I also have a responsibility for Hinduja Housing Finance. We are a 15-year-old organization. We began as a captive for Ashok Leyland. We are now at a 60,000 crore AUM, fairly diversified across, primarily into secure lending, but diversified across vehicle lending and housing financing.
Yeah, welcome, Mr. Gokul. Again, his very interesting fact is that he's a black belt in karate. So I'm all surrounded by a hiker and a karate master and a coffee addict and I'm a latecomer and a photographer. So it's going to be very interesting discussion, not on those topics, on a different topics, which is regulatory framework and technology, particularly from an NBFC fintech perspective. So again, just to kickstart this conversation, so my first question, it's like you can give your views. Everybody, this question for everybody. Maybe I'll start with Mr. Vinod. So just to begin from a big picture perspective, how do you see the NBFC space evolving in the next, say maybe 5 years, 3 to 5 years? So what's your quick view on that? That question is for everybody. So I'll start with Mr. Vinod.
In a nutshell, probably will move from being a very product-centric lending to a more tech-led, ecosystem-centric platform lenders. If you ask me in a nutshell, but I can, if you want me, I can furthermore expand it if you want.
Yeah, maybe in the due course you can expand it. So from a product-centric to a
tech-led ecosystem-centric.
That's an interesting thing. Maybe we will keep that. What is that explanation? Let people guess so that you can explain it more. Next, Mr. Gokul.
I think building on what Vinod said, I'll say moving from product differentiated to process differentiated.
Process, tech, kind of more or less similar thoughts. So it's interesting. Lakshman.
Yeah. So what at least we are looking at and what we are working towards is a solution. So basically more of a solution to a customer problem using lending as a vehicle. So basically lending will be one of the vehicles that we use to give a solution to a customer's business problem is the way we want to move towards, and that's what we think could be a differentiator for us as we move forward.
Okay, okay. That's more.
Means taking things out of the core and making them more accessible and decoupled from the processor. So this is one aspect. As far as AI/ML is concerned, I'll be very honest, we are at early days. I mean, there is no point saying that we have done all these models and all. I think there again, we are looking at it from two perspectives. I kind of have an internal framework. We broadly look at the use cases across three levels. One is what I would call assist, second is augment, and maybe third is like autonomous, right? So if I look at a process area, it's either it is origination or in credit or ops or in collections, what are the use cases which will fall under assist? It could be some simple co-pilot or a chatbot type of technology implementation that allows a person to do his job better. So it's more about clarity, that I'm clear about what is to be done. So that those kind of use cases will fall. The second bucket, if you look at augment, is where I'll put use cases where I feel there is a lot of the fintech product providers have done their innovation, and we can kind of quickly adopt areas such as OCR, ICR adoption, in extracting from invoices and kind of using them to validate. There I am avoiding, punching of data, and I'm kind of extracting the information. So this I would put it under the augment bucket, because here it helps in productivity. The first case is about clarity, this is about productivity, right? So that is the second step. So if we move by each process area, in case of origination, it may be about extraction out of invoices. In case of, say, operations where we do customer service, it might be about implementing a service CRM with some kind of Gen AI capability so that I can do some auto responses for very specific with some API integration to my core systems, right? So that could be another type of use case where I'm increasing the productivity. The third is autonomous. I think that is a little far away for as far as we are concerned, I'll be very honest, but I think that is where a lot of promises. This is where agentic AI can get used again across, primarily I think maybe in more credit operations, and maybe even in operations in terms of how we do propensity to pay model first, and then we have small agents that kind of run to see which channels are most effective, keep training on the channel effectiveness, and then auto allocate. I think these possibilities exist. The challenge will be to look at how much this will cost. So I would say our roadmap is designed like this. Let's first address all the assist use cases wherever it is possible. Wherever third-party products are available, maybe take up a few of the augment category of use cases as well. Learn from all of this and then look at all the autonomous use cases over time.
Nice, nice. That's a very nice way of putting that: adapt, augment, and then autonomous. And I mean, one thing last you just touched upon it. I will just you said little bit about the cost. See, all these things. Just a quick response from you. I mean, do you think it's obviously it helps in increasing the top line, the productivity? You said the efficiency, but do you think this? Have you seen that, or what do you think from an OPEX perspective?
I think there is definitely, it may be indirect, but I see there is a lot of value. A simple example I'll give, if we look at allocations in the collections, if there is a reasonable size of contracts, right? If you are able to build the process right, combining risk profiling and some kind of propensity to pay modeling, and build a capability for allocation automation, I think we can reduce the turnaround of what can be done manually. In our case, we still in certain areas do manually. It takes about 6 to 7 days to do this allocation. And by the time the central team propagates the allocation to the field, it's already 1 week of the 5 weeks gone in collections. Right? So I think there are sufficient business case to justify these.
I mean, again, the productivity, efficiency increases the OPEX, like the previous panel also spoke about a little bit on the systems. So whether to buy versus build, and then how the OPEX is going to impact. That's as you said, it will take maybe time. It's a curve.
No, certain technologies will take time to measure the business case, like agentic AI. But certain technologies, I think it is easily measurable. I think the costs are certainly justifiable, especially for NBFCs, which have been around for about 10 to 15 years like us. I think there are enough use cases where the business cases are easy to add.
So what do you, Mr. Vinod? I think, Sriram, when people think about Sriram is like little traditional, but now recently I've seen that you have taken a lot of effort in digitizing a lot of things. So what is your view on how technology, particularly from a Sriram perspective, how you are using the advanced AI or ML from your policy perspective?
See, I'll put it this way. There was an earlier session on legacy systems. I think I'm in agreement with Gokul also on we are probably in a very, very nascent stage right now. See, when we started off our digital journey, the first thing that we wanted to solve, it was a no-brainer, right? We wanted to solve the decision making. That's one thing that you solve first, and then look at the prior and the post. Uh, but before even getting into AI and ML, we'll say we never wanted to use it as a buzzword, right? Do not want to be on the print saying we are also doing AI. So AI has a background, right? Unless you have your data structures right, your AMLs have nothing to do with it. I mean, you're just set for failures, right? So our last few quarters have been only to get our data properly structured, the unstructured data, missing information. How do I tabularize it? How do I put it into a format that a model can read and probably predict? And unless I do that, then I'm just doing, I'm just drawing blanks, right? Uh, Having said that, the first thing that we wanted to get into was how do I, enable or empower my underwriter to take decisions, right? So, like what Gokul mentioned, everything from an OCR or from building API stacks to, read through information, or how can I fetch information on GST or a bank statement or bureau? How can I create, scoring models on it, and how can I simplify information for the underwriter to take calls, or even build models to run through surrogates or repayment tracks or do real-time scrubs of information and present it in a very simple layman terms for the underwriter to take quick calls. Beyond that, we want to do something beyond. So whatever I'm talking, most of the people are here pretty much there, but we wanted to build a dynamic pricing engine, right? So we understood that while my asset class is very different from what all of you cater to, I wanted to move away from that one size fits all type of a pricing engine. The quantum is one thing, but beyond that, I wanted to price the customer. The right customer has to be priced right. So that is where some of the tools that I'm talking about came into play. So that has changed the way the spectrum has changed. The people view it, and how do I underwrite it, and also how do I underwrite it right? So it is not about only smart decision making. It is about how can I make a deeper decision making, and it's not. It is not about. It does not stop at lending once, right? I have to look at product per customer. So I have to look at future products also. So all this information also has to help me gauge or assess, or in future also help me. How can I create more, the right products at the right time for the customers? So that is where this is the stage I'm currently in. So
Right.
yes, we have started the journey. We have scaled up to an extent where we are in a safe space to say that yes, we are using the tools that everybody is excited about. But yes, I'm in complete agreement with Gokul.
Yeah.
We are still in the nascent stage.
Yeah, I mean, for Sriram and Hinduja, the usage of technology is still in the nascent stage, but that actually, because you have a lot of products, so how do you kind of use a technology which can cater to all kinds of product, because different products are different process, workflows, different everything. So I was telling, like, Sriram has committed almost like 5,000 crores for green finance. That's a new vertical which I was also part of it. So there also I can see a lot of, because a lot of decentralized approval also happens. So that is one another challenge, because when you talk about technology, and then you feel like the decisions is mostly central, but how do you use that when you have a decentralized, like the branch manager also can? So a lot of these things are, I mean, it contextual based on the different organization. So maybe on that note, because you don't have branches, you are like NBFC and also payment solution. What is your view on the AI and ML? At least, or you are in, we can say, advanced stage, or or you are using, not using, or just it's like a myth?
See, we are digital native, right? And we have to use it. I mean, that's our core as a DNA. But again, maybe I'll take the liberty to use the word evolution rather than transformation for us. So for us also, it has been a journey. If I may say, like possibly we are at the verge of the phase 3. In a way, like phase 1, what it was for a digital company, for a fintech, phase 1 was like depending on the business you are in, you try to go deep into your core. So whether you were in wealth tech or whether you were in lending tech. So for a company like ours, which is in lending, let's say in the lending vertical, going deep by using machine learning was actually only in credit underwriting. So there was a phase 1 where we did not look into anything, but we just focused on how we go deep into alternate underwriting, look at the data, look at the digitized data, look at data which is incumbent to us being on the app, and which a data which is like sourced in different ways, a data which was semi-structured also in nature, even those OCR ICRs transforming into models and surrogate, which helped us underwriting the horizon of the customers, which maybe a traditional player was not able to underwrite. And that also pushed that aspect of financial inclusion and everything put together. But that was by and large phase 1. Then once you achieve a certain scale of vintage and an operations of the company, the phase 2 was more of like, hey, how you use the application of those use cases across the funnel, from sourcing to even to collections in case of lending, right? So in collections, how we become smart collection, how you do smart collections in the sense like you have already underwritten the customer is on or with you on live on payments on, or let's say lending side of things. Is there an opportunity for you to do smart collect? Is there an opportunity to do intelligent smart collection based on the not only the committed propensity of the customer, but what you know in terms of the intelligence and the financial health of the customer? So that's one use case. Now, what's also happening is being 100% digital platform. The sourcing happens on the digital world, right? So you have your Google properties, Meta properties, affiliates, and your own sourcing, but everything is on the digital world. What that means is you also have to externalize, because Google has their models, let's say Meta properties have their models, but till the time you don't externalize in terms of your customer persona, till the time you don't externalize events and parameters which defines the success of your customers, they will not be able to find lookalikes for you. So that was possibly the phase 2 where we looked at across the value chain and see where your machine learning or AI could be applied and you get a good ROI. We are at the juncture possibly at the beginning of phase 3, which means like now what is the next frontier in terms of Gen AI, agentic AI, or if I may say even the LLMs. We have been able to deploy and get some benefits on the Gen AI part of it, and that's on the marketing and sourcing side. Your ability to build collaterals on creatives, personalize it, tag it with the customers, it's actually real. It's not like a far distance thing, especially, and the ROI is good, or you have to do it if you're 100% digital, right? So that way it has been good. It has also helped us break certain barriers around the vernacular side of things. We did, even if you would have asked me through the question, like even 7-8 months back, everything was English only. There are certain fiduciary responsibilities around sanction letters, etc. But purely from a consumer experience perspective, it was by and large still English only. So the Gen AI is also not helping on breaking those barriers. The thing which I am personally looking forward to is like over the next 2 to 3 years, how we will be able to possibly take benefit of the LLMs. Because we do not have the data, we do not have the bellwether in India at least to actually have that kind of front loading of investments, because it's very expensive. It hasn't had the vintage, but then again, exciting times ahead. And this possibly will again break the barrier in terms of different products and asset class, because the challenge of AI ML is today, if I have been into unsecured lending and if you come back and ask me, hey, can you do secured lending? I will say no, because my models are all fine-tuned towards unsecured lending. But with the LLMs coming by, a lot of those barriers possibly across asset classes going to go away. So exciting times ahead, but that's how I'll put it.
Yeah. So from a transformation to evolution to maybe convergence, that's how you see. So Rahul, what is, Dwara is mostly considered like a last mile finance delivery or service delivery. How do you see technology from a rural or from that perspective? Do you see challenges in that, or is it similar to urban?
No, it's definitely not similar to urban, and we see that as an opportunity. Suparna mentioned ROIs, and God only knows how many projects go to die when it comes to calculating the ROI. Because see, the moment we start talking about ROIs, I'll come back to that question, but it's very important, crucial to make this comment, because the ROIs are always not always visible. They have their own payback period, sometimes within months, sometimes within quarters, sometimes within years. And honestly speaking, innovation dies when you only have ROI as your yardstick. To answer that question, for example, WhatsApp, right? Typical JLG customer base, rural India, you will not expect people to have smartphones. You will definitely not expect people to be savvy on WhatsApp. And I said, like, okay, let's take that leap of faith. We'll start sending out messages and their contracts on WhatsApp. 72% delivery and read rate.
Wow.
It was an eye opener. It was the most simplest of the project, but then that's how we need to open up ourselves to accept failure. Because if we had not accepted it, we had not put in the all right, we'll say worst case scenario, we would have never discovered that. And believe you me, there is a very significant pushback saying that no, don't waste your time. You're wasting your resources trying to just find out whether people are there on WhatsApp or not. But then there are 72% is a significant number to dismiss. Similarly, there are several other projects, that we are looking at in terms of servicing the rural customer. I would not go to the extent of saying that we are building a mobile app, to do that, because there is still some, that's some time away from where we are at. Very people are, kind of savvy digitally, but not so much as we see in the urban India. We have an omni-channel approach where we have, calling teams. We have an agency network, which is 10,000 agents strong across the country. And we do have a WhatsApp chatbot, which basically helps service the customer. So to answer your question, I think we are implementing, our own internal generative AI, agentic AI, module, which my field force uses to answer questions immediately, taking, credit-related decisions, which are straight-through processing, which they used to call up a credit manager or somebody to, decide on. They can just do it by themselves now. Instant enhancement of productivity to what assist or the co-pilot, model that Gokul was talking about. So there is significant excitement. There is equal amount of skepticism or pushback saying that, nah, this wouldn't work. My customer is not the kind of customer. But then, believe you me, none of us in the room here fully understand the customer. The customer is someone who is far, far, ahead of what we have a perceived image about.
True. I mean, yeah, the smartphone penetration is so deep that everybody is like, we did a survey like maybe 5 years before. We thought, okay, similarly, how to send legal notice, for example. Now, even Supreme Court has mandated that legal notice can be sent through WhatsApp. It's accepted, not we need to deliver it and stuff like that. So we did a survey and we thought maybe 80% smartphone penetration, but it was like 98%. So that's the kind of thing which can help us. So one last question before I go to the audience, to Lakshman. See, agri fintech is like, do you think that the existing tech platforms actually is enough from an agri perspective? What is your view on that?
So basically, I just want to ride on what Rahul has said. I think these are a few eye openers that we have also seen. So WhatsApp is the most powerful, and we all know and we all use it to do day-to-day job. And once you're on WhatsApp, the connect that you get with the customer is very different. Actually, because you're reaching where he or she is using it for so many other purposes, you are there telling what they can do using that. So that's a big advantage. And to add to what Rahul had said, yes, maybe a particular generation of people may not be very tech savvy, but now the next generation has come, particularly in the farming and rural area. There are people who have come and who are really looking at tech to enable things for them, and that is the good connect that we are also getting. So I think from the agri perspective, telling that, okay, tech might be far behind than say, urban consumer, I wouldn't say it is the difference is too big, and it is catching up quite fast. And I think once we gear up for that, there is a wealth of opportunity that we are exposed to, and that's what we might want to tap into.
Right, right. Yeah, I have heard now a lot of technology in using remote sensing GIS maps to see whether this land was green or brown for the last 20 years, to measure the revenue of that farmer or the landholder. So definitely there are interesting technologies, but how do you use it, and how do you also use your local market intelligence to substantiate? Those are all the things which we need to kind of still we need to get there, not entirely depending on only data, not entirely only depending on the manual. So, I mean, again, I know maybe we have another 5-10 minutes to wrap it up. So, if you have any questions, or I'll have a very, what do you call, rapid fire questions for these people. Before that, I would like to please, can anyone give a mic there? So, audience questions. Okay, Rahul is so fast.
Thank you so much, Rahul.
He's counting the steps. So please introduce yourself, your name, your organization, and you can tell the question to which panel member.
Sure, thank you very much, and thanks for this opportunity. Uh, my name is R. Shankar, and I'm a veteran banker of 30 years of experience. And first 15 years in India, the subsequent 11 years almost in various parts of the globe. And I worked across commercial banking. I've been hardcore into technology as well, been into consulting, and now on the strategic side of things, at the board level, being an independent director with corporates, etc., etc. So I would like to actually touch upon the views of ROI versus strategy on the technology side. Okay, while I have been on all sides of things, been on the both sides of the table, etc. One thing is very clear. I mean, you cannot mix strategy with ROI. Okay, both are completely poles apart. I mean, if you are strategically clear, okay, so you have to do certain things. Let's say, for example, your company or your entity takes a call, okay, on a merger and acquisition, okay. Once you take a call that you are going to take over a company or you are going to merge with another company, period, then you cannot bring ROI into the picture, okay. So because the moment you bring ROI into the picture, that negates the very aspect of strategy, right? No, so now, for example, I've handled quite a bit of mergers and acquisitions activities in the banking and NBFC space, right? Now, when the call is taken that yes, we are going to merge, then you need to focus only on customer experience, because customer experience is at the core, and
Yeah.
Customer centricity assumes the highest importance, because when you're going to do a technology integration or an HR integration,
Right.
or a brand identity integration, the biggest impact comes on the customer, okay, and the impact of the customer comes on the employees of that particular organization,
Right.
right?
Yeah, sir, very, very valid points.
Yeah.
Do you have a question, or
Yeah,
it's
so
just
now-
a comment?
So I just wanted to express my views on that.
Okay, okay.
So I mean, it's very difficult to integrate all of that.
Thank you so much, sir. Very, very well.
And once you do all of that, then you take a call on compliance, whether it's going against the regulator or
Yeah.
it's going with the regulator.
Got it, got it. So you're saying that ROA is, when the strategy is being taken to do, you should go ahead, the ROA
Yes.
comes next.
Then ROI can be taken
Yeah.
at the business
Got
level,
it.
individual business level.
Please, can you
Thank you.
please hand over the mic to
So very specific question from Mr. Vinod. My name is Swapnil. I'm the SVP product. I had product at Avanti Finance, based out of Bangalore. Predominantly livelihood loans, predominantly rural populations. So we've built a book of about 1,700 crores in the last 8 years, but very livelihood, financial inclusion, that kind of DNA. The questions are, you said something like 5,000 crores for green initiative. I understand it very hazily, but if you can just take 2 minutes to give us 1 or 2 use cases, like an end use case of a loan that you think of as a green loan.
No.
No. Maybe I should return the mic to you.
Yeah. So, yeah, all EVs, electric vehicles, solar panels, everything which is not consuming a fuel can be categorized as green.
Okay. So let me be more specific. Are
Yeah.
there any agri use cases of what you say as
Not
green blend?
necessarily.
Okay.
Could be, as I said, anything vehicle, starting from a two-wheeler up till a six-wheeler, and solar panels and, the battery setups, which charging units, everything will fall under the green
Farm
space.
inputs for that thing.
Anything,
Okay.
as long as it does not consume
So
a
there's
fuel.
no
So,
like a
yeah.
new whole new definition of
No,
green.
organic farming
Everything,
also
yeah.
classify under
Thank you.
green.
That was my
I,
question.
I didn't say that because it need not confine itself to a, agricultural kind of a setup.
Solar water pumps,
Solar water pumps, yeah.
funding solar water pumps or funding mini grids in the farming area. Most of it comes under this. Yeah.
Rainwater harvesting?
Rainwater also.
Could be,
Yeah.
but as long as you're not fueling it again with.
Yeah. Anywhere which is reducing 20% of CO2 emission is
Correct.
considered as
Yeah.
green. So even if you convert a manual lathe to a automated lathe and which is reducing the consumption of electricity or increase the productivity, then it is considered as green. So even if you give replace a 3-star AC with 5-star AC, that's considered green.
In fact,
That's
Not in
what
Sriram's definition.
no, methane consumption reduction. So methane consumption in rice, we are looking at as one of the areas where actually green funding is really helping, because rice is the highest methane producer. Sorry, it is the highest methane producer. Now there are few rice varieties which are actually reducing methane production and funding that, and that has a premium, and that funding that is considered fully green.
great. Thank you for that question. Any other question? Okay, that is one person. Yeah.
Hi, sir. My name is Shanmugavel from Statfin. Sir,
Stanfin.
Statfin.
Statfin, yeah.
My question is
To-
NBFCs, yeah, anyone can answer.
Anybody?
Yeah.
Okay.
So, I'm from the fintech background. Here, a lot of fintech companies are ready to support NBFCs, banks to protect you from the risk or fraudulent activities. But NBFCs and banks are more interested in in-house building. Why this choice you are choosing when you are very well, we are ready to work with you for a win-win situation. So, and then we are more having a strong team than banks and then NBFCs in innovation and technologies. So, what are the right approach you are looking from the fintech backgrounds?
Yeah. Gokul, you want to try or?
See, I'm not sure I necessarily agree that everybody is building it in-house. I think we are certainly looking at a mix. So the general challenge I see with when we interact with product companies in general is the internal selling is left out of the selling process itself. So the product vendors kind of pitch to a couple of stakeholders, and then doing that internal selling in terms of getting the choice done through the risk compliance and everything is left to that. Either if you're met with a business stakeholder, then he has to sell it to the IT guys, or if you are selling it to someone like us, then we have to sell it to the business guy. So I think that's where the gap is. I'm not necessarily sure that we have taken a position we will do fraud in-house and will not look at products, at least not in my organization.
Yeah. Maybe the money laundering, that's like hitting some the Dawood Ibrahim list. That's a small API which company can do it on their own rather than buying outside. But I'm not sure. I mean, anyone wants to add, or we can, if you have a view.
No, I mean, what you just said, even for a fintech like us, that becomes a challenge. I mean, there are solutions which come by, but when we discuss about like, okay, in terms of the compliance around, let's say, data protection, or there is something which is like, hey, per the RBI regulation, does it fit in terms of the purpose which you call out? Those answers are not there. Those answers are again left internal, so it becomes a heavy lift. So we are better off than doing internally. And the other point also is, at least from a fintech NBFC perspective, I can say, even in solutions like let's say anti-money laundering and all, a lot of it we see like, it has to be well customized. When you want to go deep, it has to be well customized for your own data, and that always is not possible when you try to buy something off the shelf, right? So trying to buy something off the shelf, trying to integrate, that becomes a heavier lift for us, and maybe we are a little quicker in terms of building our own models. I mean, we have our own modules in terms of fraud protections, so
Yeah.
it becomes a little easier for us, to be honest. But again, it's not a closed mindset.
I think this is connected to this larger buy versus build kind of a question. It not only on this fraud, it starts from LOS or so lot of things. Thank you for that question. Yeah. So I hope there are no more questions, and then I'll just take 2 minutes just to ask this rapid fire. So which I've prepared, I should ask. So, but, so I mean, everybody, just one word, two word, or one sentence. So one regulation you would like RBI to revisit.
None.
Very safe.
Yeah. I think.
DLG and co-lending.
Oh my God. Go to.
On a lighter note, let them make up their mind and come back all at once instead of coming to us every Friday like what Rahul said.
Sir, anything?
Okay, so looking at the farmers and farming side, I think the regulations are more towards owner farmers than the tenants and the farmers who are leasing leasing the farms and doing. That's one thing that we have seen is very difficult for us to actually push it back as a PSL to the banks also. If the regulations are little better there or a little inclusive there, it would help us, we NBFCs who are focusing on Agri, to actually move it as PSL, and then the whole adoption becomes much more, inclusion becomes much more better.
Sparno?
Yeah, not to revisit, but very two asks or requests. One is on the KYC side of things. We are like 100% digital on app, right? But then if the KYC mandate cannot be that a human has to be involved. If you have a tech problem, the solution also has to be a tech problem. I know there is like a lot of sandboxing happening at RBIH, but a quicker, little more assured, or even if it means like it has to be a little more risk-based, even in terms of KYC and how it can be, because otherwise it could be disruptive to the entire digital-only model. And the second very quick ask is, I spoke about convergence, right? And at this point in time, though the SROs, etc., are there, when you are a fintech or when you are a digital NBFC, you are at the last mile, right? And then there are a lot of things which pop up which are inter-regulatory in nature. Even if you're doing a cross-sell and insurance, that becomes inter-regulatory. So I'm not too sure whether it's RBI or whether it has to be a framework which sits at the level of a DFS, and therefore it would be very helpful for smaller entities who are highly indexed towards innovation and not get burdened towards multi-regulatory aspects. Even a case in point, I think it applies to all of us. Even TRI has regulations in terms of phone numbers, right? 1600 numbers. The practicality of collections.
Yeah.
I mean, this again, at times it becomes an elephant in the room, but there has to be something which is going to be a lot more pragmatic. So those two requests.
Yeah. So one last question. Again, very short answers. One tech investment which has given you the high ROI. Anyone?
Not yet, but I believe in machine learning and AI.
Okay.
I think same. I think I've already answered that. I mean, all the AI stack that we've built on decision making, and I think EW is something that we've built on the collections also. So
Early warning signal for collections. Yeah.
So one thing what I have seen is integrations, and ease of integration has been one of the or building platform or a layer for integrating with quickly integrating with other partners and service providers, and also on the data coming in for the
So
that
your
is one
own
of the-
organization platform. Where
Correct.
Okay.
That's one thing where I see a
Good
value.
one. Yeah.
Yeah, machine learning and underwriting.
Underwriting. So credit decisioning.
I would say KYC. I mean, it has been a game changer in the rural India because, I mean, see, this is not a problem which exists in urban landscape. But rural India does struggle with KYC, and I think some of these amazing work done by RBI, UIDAI, and all the fintechs, regtechs out there who are making it easier for people to access. So yeah, I would say that.
Yeah. I think, I think overall, I think it's like with that question, I think I'll just wrap it up. Basically, what we have understood or I have also learned in this last 1 hour is, I think we need to be inclusive from a product customer segment perspective, and we need to be innovative in the sense from a technology decisioning or any of the process, or using the technology for decision making, not only just for process, and in the same time you need to be compliant. So that's the kind of conclusion: be inclusive, innovative, but also be compliant. So that's the overall takeaway from this whole session, at least for me. So I thank you so much for the panelists, and a big round of applause for them for answering all the questions. And hopefully you guys have some takeaway from this conversation. Thank you so much.
Thanks to our esteemed panelists for a wonderful session. Thank you so much. Now I request our moderator, Mr. Thiru, to please present the memento to our speakers, Mr. Lakshmanan, Mr. Vinod Kumar, Mr. Gokul Rajan. I request everybody to please put their hands together. Mr. Rakul Tripati, Mr. Supurna Bakshi. I now invite Mr. Abhinav Chaudhary to please present the memento to Mr. Thiru. I request everybody to please stand for the official group picture. Thank you so much, everyone. Now to recharge ourselves for the exciting second half, it's time to have a lunch break. We invite you all to enjoy the meal, as we have some